Howdy y'all, Stock Warden here back with another video, and today we're looking at the Geron Corporation and to kind of see some of the new stuff that they have started coming out with for their new set of plans. And honestly, I've got to say it's a larger shakeup than what I could have imagined, and I don't know if it's necessarily going to be in the right direction or not, but time will tell. And also, by the time that I get done reading this singular news article out, then y'all will be able to make a pretty good definitive decision on your own whether to hold on to the shares on this stock or not. So, starting off, Geron Corporation, they've been holding I would call it a decent median share price for the past 6 months. They've held anywhere between $1 to $1.50 a share, and so they've pretty much just kind of stayed in their realm and not moved a whole lot. It's not a very volatile stock. They are a health stock, so that area is not necessarily all that volatile, but the Geron Corporation is also still a early phase company. So it could go one of two ways drastically, but they do have a product that a lot of people stand behind, and it can very much produce a very strong base for this company to continue moving forward. So back on today on December 16th, the Geron Corporation began implementing a strategic restructuring plan intended to position the company for long-term value creation for patients and shareholders and improve its financial discipline, which they are just more or less umbrellaing this in saying that it's the plan. So the company's board of directors have unanimously approved the plan on December 10th, and as a part of the plan, the company will implement a reduction in workforce of approximately 1/3 of its current approximately 260 employees. So the company began notifying the affected employees on December 16th, 2025, and expects the RIF to be substantially complete in the first quarter of 2026. So the company estimates that it will incur approximately $18 million in restructuring and restructuring related charges, consisting primarily of one-time employee severance payments, healthcare and related benefits, along with other employee related costs. So the company anticipates that the restructuring changes will impact its results of operations during the fourth quarter of 2025 and also the first quarter of 2026, and that most of the cash payments will occur through the first quarter of 2026. So the restructuring charges are not currently anticipated to include any non-cash charges associated with equity-based compensation or otherwise. So the restructuring charges and the timing of the charges that the company expects to incur in connection with the plan are subject to a number of estimates and assumptions, and actual results may differ materially. The company may also incur additional costs or charges not currently contemplated due to events that may occur as a result of or that are associated with the plan. So, with the Geron Corporation turning around and taking out an entire third of their workforce, that's a little bit more to say than they are just trimming the fat. So this company is a new company. They are pushing forward heavily on their Ritello U.S. commercial standpoint on things. They have actually announced another restructuring plan on the other side of things, which is going to support the Ritello U.S. commercial strategy and investment in clinical developments. So they're planning on trying to save as much money as they can by cutting some of their workforce, well, a lot of their workforce, to try and create some extra revenue that they can push into, it seems, more R&D and clinical trials and things of that nature, to be able to boost the Rytelo sales and also to be able to push Rytelo into more hospitals and into more practices. So then the company can actually build a lot larger scale on their sales of the Rytelo vaccine. So, so far, the Geron Corp's operating expenses is expected to be less than 2025 in the next year, which is due to them talking about leaving, not only having this third of their workforce being taken out, but they are not looking to bring any extras on at the same time. They also have a reduction in their current workforce. They had more than 300 employees at one time, and they had already had a certain amount already either leave, quit, or be let go at the same time before they've had this approximate 260 employees that they are now trimming another 33% out of. So the company is going to be left pretty shallow as far as the workforce is concerned. So, because whenever you're looking at turning out that much, then you're going to end up only with about 170 to 175 people whenever you were at full tilt at 300 employees. So that's going to be a large restructuring. So with them dropping that workforce by 1/3 on that large of an area, that also means that the other 2/3 that are staying are going to have to pick up the rest of that load. So that's going to put a bigger strain on the workers and the workforce that is staying with the Geron Corporation, and more than likely that leads to a lot of different issues in cash value, because you let go a lot of people hourly, and then you turn around and have the people that stick around have to do more work. Well, most of the time, those people demand to either have raises or they move on to the next company likewise. So this can be a good thing. It can be a very bad thing. But as it stands right now, they are trying to push the position for this company into the investors' hands for long-term value creation. So they are moving. Their plan is to move the stock in the correct direction. Now, whether that actually happens or not, I cannot say for certain. But if you look at the way that their earnings were in the past, they did exceed expectations over the past 3 quarters of 2025. But with them going to end up incurring a pretty good loss that might show up in Q4 of 25, but will definitely be there for Q1 of 26. The stock might be a little bit higher than what it'll end up being once those losses come through, because then they're going to have to pull up by their bootstraps, literally, to be able to bring in all the work from the third that they are letting go, and to be able to push the Rytelo vaccine out even harder for them to be able to continue gaining more profit, to gain more traction, to then be able to distribute even more. So there's a lot of open-ended going on with the Geron Corporation right now. They have a plan that they're setting forth, and hopefully it works out. But they are definitely playing with a very wide open space, and it can go in any direction at this point in time. So with all that being said, I hope y'all enjoyed the video. I hope y'all were able to kind of get a little bit more on a scope of the direction that the Geron Corporation is trying to head into, and be able to make a pretty good opinion on where you want to stand with this company financially and also portfolio wise. So with all that being said, this is the Stock Warden riding off. See y'all come back now, you hear?